I'm so excited about this webinar. We know it's not going to be easy. This is not a comfortable subject. Okay, that's an understatement. It is actually one of our worst nightmares as a mother, but we're going to make it as easy and painless as possible and beneficial so that by the end of the presentation, you'll know what you need to do to prepare and take care of this so that you'll never have to think about it again. From personal experience, I can guarantee that you'll feel a huge weight lifted from your shoulders because, heaven forbid, should there be something that happens and you do lose a child, you're 100% free to grieve, and you will not have to worry about any of the financial worry, the funeral costs, the hospital bills. And for me, one of the biggest reasons why I'm so passionate about this is thinking about rushing back to work after the loss of a child. That's one of the things that you will not have to consider anymore. That'll be taken care of because you were responsible and wise enough to think about it beforehand.
All right, so my name is Ryan Ingram. I work here at Thomas and Grushon Insurance Agency, and we're going to be just looking at how to take care of life insurance without any sort of fear of being taken advantage of. So what we are going to discuss today, and after listening to this webinar, you will know our 3 secrets of children's life insurance, what options are available to you, how to determine what is best for you, and please listen to us. I know in the world that we live in today, there are just so many distractions, but generally this process takes an hour, 2 hours, sometimes even 3 hours to get all this information across. So we're going to try to pack all that information down into about 30 to 45 minutes. So please give us your undivided attention, put away Facebook, texting, all that fun stuff, and just bear with us for these 30 to 45 minutes as we really answer all the questions that you have for us. So why should you listen to us? Gwen, in particular, has a really long line of insurance. Do you want to introduce yourself? I guess we haven't really done that yet.
Sure. Just so you know out there, I am 3rd generation in this insurance business. My grandpa started the agency here back in 1960, and he was just very passionate about helping his family and friends learn more about coverage. They focused especially on the personal lines, so home and auto, and my dad and my uncle both became the 2nd generation to take over the agency here, and then I'm 3rd generation. And the thing that makes me a little bit different than them is I had 11 years to experience not being in the workforce. I took a break from working, and I had 5 children in those 11 years and loved every moment of being at home. But when given the opportunity to come into the agency, I knew for certain that I was going to be the most passionate about life insurance because I don't want to be someone that can just sell you on something, on a product, and then walk away and be out of your life. I felt like the most important thing to offer was something that gave people stability, something that meant something for a long period of time. And especially being a mother, when I went to the classes that taught me about all of the different products that were out there, life insurance it hit a special place in my heart because probably like me, you've seen the myriads of things out there asking for money for certain situations where there's a child that's really sick, or the worst things is seeing those GoFundMe pages when there is a loss of life when it was unexpected, and it's left the family in distress, not only emotionally, having to face their nightmare and face something that no one ever wants to face, but then they're also faced right after burying a child with all of the bills that come right after that. So that's just a little bit about why I have such a passion about life insurance, and please stick with us. I can't wait to explain a little bit more about this.
Yeah, and I am Ryan Ingram, as you saw. I am a former police officer, and over that time, I've witnessed numerous child and teen fatalities, but I had the honor of sitting with those families during those difficult times. And quite frankly, the two worst calls that I ever had to respond to were two separate infant deaths. They weren't expected, there was no health issues, but those sent me into a depression. And consequently, I went through about a year of counseling or therapy, whatever you really want to call it, and they weren't even my kids. So I can't even imagine the pain that would have on the parent. And now that I am a father of one and one more on the way, just shed my light. It shed light to me about the importance of it, and just having the opportunity to walk alongside some people that went through that. I just don't wish that pain on anyone. And I don't think I've ever told you this, but one of the first life insurance policies that I sold was to a firefighter around here. And whenever he sat down in front of me, he just started uncontrollably crying. And he was just like, I should have done this so long ago. I honestly thought that I did it last year at our fire department, but turns out I didn't, and I just lost a child last week, and he was already back to work because he didn't have anything, and
That's horrible.
those bills just piled up. So that was a huge heartstring that not only told me I was in the right line of work, but that we can proactively just talk about this, discuss it, and it is painful. Nobody wants to talk about it, think about it by any means, but once you do it once, it's done. You pull the trigger, it's over, you never have to think about it, and you can rest assured, God forbid, anything happen, then it's covered. So the one takeaway that we have that we really want everyone to understand is that everyone should have life insurance on their children. It just makes sense. So we're going to dive right into our secrets with secret number 1. I know you can't wait. It's not like you already saw them on the last page.
Right. So secret number 1, I think this was probably, to me, as a brand new agent, the most surprising, because children's life insurance isn't nearly as expensive as parents expect that it's going to be. In fact, in some of the studies that they've done recently, 50% overestimate the cost of life insurance by at least 4 times the actual cost. So that's huge when you think about people really assuming that it's going to cost them too much to even fit into their budget. But we're going to break down what the reality is.
And I think you had an epiphany, right? Is that
Yes,
what you wanted to tell?
I did.
Yeah.
I had an epiphany. So when I was going through all the training and I was starting to really learn about life insurance, one of the things that came to my head was, what do I spend my money on? And as a mom, you're going to relate to this when I start bringing this up, because if you have 1, 2, 3, it doesn't matter how many kids you have, I'm sure you are going to relate with when they get in your car and you drive past the Golden Arches, or for my family, Chick-fil-A is the one that they love. I start hearing the whining. I'm starving. I need the Happy Meal or the latest, kids meal that they have. And I can't even tell you, because I really don't track it, and I probably should, how many dollars we spend every single month on eating out. It's one of those things that, as an American family, it happens. So you're spending money. It's probably not something that every single dollar that's going out, you're thinking about it, because we all need to eat. So the epiphany that I had was, I'm spending easily $10 a week per kid. This was, just if you think about a Happy Meal being an average of $3.50, that is probably about the standard price. And I'm spending about 10, I go 3 times a week. I'm sure that some of you may go less, some of you may go more, but I was thinking about how much we're spending, and that's just going, down the drain, really. It's not buying anything that is something to hold on to for a long period of time. It is momentary gratification. And when I lined up something of value that would be there for those moments, not only, I know we're going to get into a whole lot of different things with life insurance, but the real thing that stuck out in my mind is that's $10 that's just gone for each child every week. So $40 a month, and it's gone. What if I were to put even just a portion of that into something that was lasting for them? So that was kind of, well, you'll see kind of where we're going with this. But I think that once you see the numbers and once you see some of the stuff that we're going to talk about, it's going to make sense to you.
I had a little bit of fun doing that for just drama's
Because of
sake,
my
slowly
because of my
introducing.
5 children, yes.
Yeah, so
Oh, all
right.
right.
the second secret, it's okay to think about it. At first, we understand it's awful. This is a topic that a lot of people want to avoid. But thinking about it, we want to encourage it. We want to open up this dialogue. It's necessary. And, you're watching this webinar. It's going to take 30 to 45 minutes. And the actual application process is so much faster than that. So an hour and a half of thinking, and that's tops. That's as long as I could possibly foresee this taking. Just an hour and a half of time invested, and that's it. You've got the next 18, 21, 23 years, however long until they're out of your house and they're no longer your responsibility. You don't have to think about it at all. It's done. This is one of those things where, again, once you pull the trigger once, you don't have to think about it anymore. And we've seen a lot of times how there are parents in here that want to avoid the conversation at all costs. They want to properly insure their home, their cars. They go to great lengths to make sure that each other as the spouses are covered. But have you ever had any experience with people?
I actually have. I'm going to bring up someone that is a customer of ours who they are both very, I would say, bright. They both have really great careers. They have several children. And, I sat down to talk to them about their coverages. They wanted to know what would take place if they had a loss, if they had a fire. And we started to look at that. And they wanted to make sure that they had the proper coverage so that they would never have to suffer financially if they had a fire in their home. Yet, I also provided them with some information about life insurance for their children, and the conversation completely stopped. So, part of it was they didn't even want to go down that road. They didn't even want to think about it. And of course, I understand that completely. But one of the things that I want to get through, and I think we both want to get through in this conversation, is you're insuring. It's mandated by state that you insure your auto before you get out on the road. And most of your mortgage companies are also going to mandate that you have that insurance to cover your home because that's their risk that they're taking to give you that loan. But what about insuring your child for the future? I mean, this is your loved one. This is someone who you care about. It's not a material. It's not a thing. What you have with this child is invaluable. So even though it's not the most comfortable conversation, it's one that has to be talked about.
Mm-hmm. And just putting myself in that shoes, I've shared my experience a little bit, and just thinking through it. If I ever have to bear that, then I would much rather, like you said earlier, just be free to grieve rather than having gone through the worst day of my life and also having to go back immediately to work and without any sort of money. The average funeral cost, I believe, is like $15,000.
Right.
Is that right?
Yeah.
So $15,000, that's quite the emergency fund. If you've, saved that, that's wonderful. But I couldn't imagine, again, having to go through the worst day and also completely depleting my funds and go back to living, foot to mouth. Is that what they say? Foot to mouth? Is that a real thing?
Hand to mouth?
Hand to mouth?
I don't know.
Either
Huh.
way.
Now you can laugh at us because we don't know.
Either way sounds uncomfortable.
Oh.
The third secret. This is this is along the same lines, but the earlier you prepare, the better off your family will be. If you can insure a child as early as 15 days. So as we mentioned, the time commitment. If you get this conversation done with out of the way, just the first time, within the first 15 days, you're set. You don't have to worry about it. You know that you're covered. Heaven forbid, should anything happen, it just isn't.
It's no longer a conversation. You know, like
Yeah.
you can get that out of the way. And the great thing is there's just a few questions that you have to ask and answer on these applications, and then it's done. You know, so I know right here you say any history of family illness. My husband has a history of family illness, and the wonderful thing about getting this done when we did was I don't have to worry, is my child at 15 years old going to start having some of the same problems that his family has had for generations? They're guaranteed insurability because of these decisions that we made when it wasn't a difficult decision. Right?
Yeah. So guaranteeing the insurability, just you're saying even if they were to develop some sort of medical issue, then since they already had insurance, that company, whoever gave them the life insurance, isn't going to take it away
Right.
or deny any future coverage.
Right. It's done. You've already signed the paper. They can't go back on you and strip that from you. It's, you know, it's a legally binding contract. So that's one of the benefits of really thinking about it at a young age and never having to think about it again, like we've said.
All right, so now getting into the more the meatier and more potatoier, the options that you have with children's insurance. So here at Thomas and Grushon, we're an independent agency. We're going to go over the most common options that we have, but as an independent agency, we have access to an endless amount of different insurance companies and all the products that they have to offer. So if we were to attempt to compare and contrast all of those, then we would be here for way too long, and you'd probably be a little bit mad at us for dragging it out for so long.
You'd be turning this off for
Yeah,
sure. Yeah.
Absolutely.
Yeah.
But we're going to go over the most common ones, but rest assured, if these common options that we do go over don't seem to quite fit your family's needs, then we have access to just about everything there is out there. So the types of children's life insurance that we're going to talk about are the first, if you have an existing policy, you can attach your children generally to that policy. Every company is different. We know how our carriers treat that, but we're not quite sure if you do have an existing policy, who it's through. And generally, that is a policy that you have apart from your workplace.
Right. And one thing I want to specify about that too that's really important to think about, if you do already have a policy and you have your children listed as a rider, are you paying for each child individually on that rider? I take a look at those policies, because one of the benefits of some of the policies that we're I guess knowledgeable on is once you list one child, it becomes an automatic rider for each additional child that you give birth to, or even any children that you adopt. So that's important, because sometimes we get busy, obviously, and we're not going to think about when we have that next child adding them onto that policy. So that's something that's nice and that you need to think about when you do attach them as a term rider to your policy.
That really saves on time, I imagine, as well, especially thinking about this.
Oh, yeah.
Because
Absolutely.
truly, the first child you have after you get that rider attached, then any kid you have to follow is born insured.
Right.
Is
Correct.
there
15 days.
15 days after.
That's it. Mm-hmm.
Wonderful.
Yep.
So in addition to the term rider, and term rider, that is a funny word or concept. That rider just means that it is attached to an existing policy.
Right.
And then standalone policies, ones that aren't attached to your policy if you currently have it, those are available from as early as 15 days until 17 years old. And you have whole life is the most common that we've seen. And you can choose to pay that however you want to, annually, monthly, and there's also a single premium option, which you can elaborate on this if you want to, but really, just by the name, you pay for it once, and that's it.
Most commonly we see as we kind of break this down a little bit more, the single premium whole life policy for children. A lot of times we see grandparents, or people who want to look for a way to distribute funds on a one-time basis. That is why single premium is so nice. You're able to choose the amount that you want to cover that child for, and typically the underwriting is obviously a lot easier when they're a child. So these single premium policies became very popular back in the 80s, because they were able to, you can kind of shift some of that wealth into something that is a generous donation that's also, life insurance is a non-taxable event. So it's a really great product to think about.
All right. So just to recap the options, we have the term rider, the whole life, just the traditional monthly, annual payment, and also the single premium, which is often gifted by grandparents. And the rider, the rules and regulations on that. If you want to reach out to your existing, whoever you received your initial or your life insurance policy from, and figure out if it is an option to add your child, then here are some questions that we would recommend that you ask, and that's the cost per child. You mentioned that just a few minutes ago. Some policies you pay, let's say, $4.15 per child. I only know that because that's a Grange product, and as I was putting this together.
Yep.
That's per child, but some other insurance policies, it's per household. So regardless of the number of children you have, it's one payment. Let's say that's $10. Just, I made that up, but let's hypothetically assume that. So you could have 5, 10, 15 kids. They're all covered for the agreed upon amount, and it only costs you $10. So if that $10 got you $10,000 worth of coverage on each child, and if you had 10 kids, that's $100,000 worth of coverage for just $10. And the last thing that is really important is, can that policy be extended or converted? So if so, what are the underwriting requirements of that? So that just goes back to ensuring that the child always has access to life insurance. I've met a lot of gentlemen who develop diabetes. That's actually been pretty common that I've run into as of late, in their late teens. So they were never able to get life insurance because they didn't have any prior to being out on their own, and then they were no longer eligible for it because they developed diabetes.
Right.
But because of that, it's pretty common, and companies have, there are policies that you can get specifically for diabetes. So probably that wasn't the best example.
There are, but I will say the thing that is astounding to me is the amount of people in America that have diabetes.
That's true.
And the amount of premiums you have to pay if you want to have any sort of life insurance with diabetes, I guess is the way to put it. There's a lot of other, I was trying to think of the right terminology to use, but when you go into the underwriting process later on in life, already having been diagnosed with something, it's just a lot harder process to go through. So that's why when we talk about, can the policy be extended, can it be converted, that's the beauty of some of these children's policies that we're going to get into here in just a second.
All right, so now this is going to be really fun. We are going to go on a field trip. As an independent agent, again, we have access to a lot of different carriers, but for this, we're just going to use auto owners. So just to show you guys how everything is done on our end, and how easy of a process this is. So we're going to start a new life insurance quote, just to figure out what someone is eligible for and how much that would cost. So just for fun's sake, I'm sure my wife wouldn't like this too much, but we'll use Jackson, my son. And
Give
we'll
him
just
a
do his
fake
age.
birthday. Okay, yeah. I was gonna say do something so it's not.
Yeah. He's a dude, and he's never had any tobacco. We'll give you credit for it.
All right. So there's a few different ways that we can look at this, and that's also the really nice thing with auto owners. So we can go anywhere from $10,000 up to $50,000 in whole life. Let's just say that we want to start with on the smaller end of things, and we're going to just do a $10,000 whole life policy with the children's whole life simplified issue. What this is going to show for us is what you're going to pay annually. Since Jackson is 1 year old, it's $73 a year to pay for that $10,000 worth of coverage. Now, the beauty of this product, if you want to go ahead and check eligibility and just scan down, we're going to scan slowly because I think it's important, that full disclosure, that there's going to be a few questions asked to make sure that your child is insurable. So it's going to ask during the last 10 years, and you can go ahead and we'll leave it up long enough that you can see what those questions are. And obviously, we're looking for no on all of these questions to be able to write this simplified issue policy. And once we get through here, this is asking...
Oh, that's fun. Number 2 says, are you currently confined to a hospital or nursing facility? I hope my 1-year-old is not in a nursing facility.
Yes. So now we're going to save it, and it's going to do its magic. And now we can look at the illustration. And this is the part that I really want you guys to pay attention to, because I think this is the part that epiphany that I had about the kids' meals happened when I started to see this. And what I want you to see as he zooms down is up until the age of 18, we're going to pay that $73, right? And we're going to have $10,000 worth of coverage. Right here in the middle, we should use a little click. There we go. We see the cumulative premium that you're paying into this policy. So every year you're plugging in the $73. You've got a $10,000 death benefit. And the beautiful thing about auto owners is they hit 18 years old. On their 18th birthday, their policy goes up 25%. And I want you to notice you don't pay a dime more. That never changes. But because they've made it to the age of 18, they give you 25% more coverage on that child. And then at the age of 25, it goes up another 25%. So from the time that you started this policy at whatever age, you are going to double the amount of death benefit, and you're never going to pay a dollar more, which is what I think this is a beautiful policy because there's nothing that changes in your payment. It's a very straightforward contract, and you're building a cash value, and you're also, keeping the funds down that you're putting into it. I want us to go ahead and go back. This also, just so you know, a whole life policy, it runs out to the age of 121. They do that so that you are guaranteed a death benefit. A lot of people that start these policies, including myself, my husband and I felt it important to get these policies for our children while they were young. I think I didn't become an agent until, I'm trying to think. I think my daughter was maybe 10 when we purchased, my oldest daughter was 10. So I'd like for us to take a look at maybe a 10-year-old female to look at the differences. And I also want to show you that there's different values. You can go 10,000, 20,000, 30, all the way up to 50, and anywhere in between, which is really nice because you need to make this fit in your budget. This isn't something that we want to bring to you so that it's another stressor in your life. The whole point of this is so that you can be comfortable knowing your children are taken care of. They have that guaranteed insurability in case they have some sort of diagnosis. But they also, you don't want to have to pay a fortune for having something like this. So
right. And a few of the things that I wanted to point out real quick is the annual premium we see is $73. And your payment options here, since we chose a lower face amount of $10,000, it's paying it monthly isn't an option. They will take quarterly, and that's $19.34 per quarter. So every 3 months, it's just $20, which the numbers you threw out earlier about
feeding your family. That's I
This is
took
pennies.
pennies, and these rates are guaranteed until age 121. So, if your child is mighty enough to live to 110, they will only ever pay $73. So let's go back and do what you were speaking.
If you
on.
want to, first, it might be good too to see what, just for someone who might be curious, if you want to put in the 50,000 coverage for Jackson real quick and just let them see kind of what the annual is on that, because it's still such a affordable number. Annually, 265.
So let's look at the illustration on that, because I can't do 25% of 50,000 in my head. But at the age of, so let's look at the payment options. So monthly, it's now $22 per month, which is still
$5
Not-
a week. $5.
not terrible at all. And then at the age of 18, it doubles, or it goes up to $75,000 worth of coverage, but that 265 annual premium stays the same. And then at 25, it goes up to $100,000. But again, the premium is level; it never goes up, and they're insured for $100,000. And at this point, as a 25-year-old, the policy has $6,300 worth of cumulative. So all you've put in there is $6,600, but
There's actually a cash value
Yep.
in there of more than that.
of $7,700. And again, all the way up to age 110, which is a lot of fun. And at that point, the surrender value is almost the full face amount of $95,000. What would you do with $95,000 at 110?
I think I'd take a cruise and relax. Do you want to take a look then at a 10-year-old girl just for kicks?
Yeah. So
Okay.
for Jackson, since he's not old enough to fight me over this, we're going to make him 10 years old and a female.
So you see it jumped up a little for the 50,000.
$40.
Right. But even, and that was the question that I kind of had a lot when I first started really looking into this product is, oh, my child is 17, nearing the end of when I can purchase this policy. Have I waited too long? Is it going to cost me all kinds of money? And we do these, you see how quickly and easily this is done. We'd be more than happy to show you. But the dollars and cents, just like it does here, when you look at the cumulative premium that you put in versus the amount of death benefit, even purchasing this as a gift for your child to give to them once they are a responsible adult, to me, when you look at the numbers, it just makes sense.
I agree. So it went up $4 per month, roughly. Since we're in here and we could edit it, let's go to 17. So at $17, it goes up another, I think that was $70 annually. So $34,
$34 a month.
which is still less than the cost of feeding one of your hungry 5 children.
Right. And this
Alright.
is the one, just so that I can also, be transparent with you. We purchased $50,000 policies on each one of our children. So is there an investment on our part yearly? Absolutely. To have this coverage, there is an investment when you look at insuring 5 children. But I still feel like my illustration with food, or my illustration with even just activities, taking them, obviously when you take them to the zoo or you take them to an amusement park, you're creating memories. But the wonderful thing, I feel like, by putting a little bit aside and maybe going one less time a month out to eat, to do things like this for them, it's giving them that valuable policy that down the road, especially if something happens to them and they were not able to insure themselves, what a gift. And I think that's the purpose of looking at this illustration is the amount that you put in versus what you get out of it is huge.
And these are all guaranteed as well on here. So if this was purchased for the child at 17 years old, it still increases by that 25% whenever they turn 25. And that's regardless of whether or not they developed a medical issue or not. So at a bare minimum, from 25 until 110, they've got $100,000 worth of life insurance coverage, which is phenomenal. That's, again, as we discussed, the average funeral policy being, or funeral cost is $15,000. That's well over to take care of any sort of outstanding loose ends or anything like that. So let's go back from our field trip. All right, and this is a scale of it's the same company, Auto Honors, and it's just a more from here right in the middle. You've got the issue age. It goes all the way from 0, just that 15 days that we talked about, all the way to 17. And these are the price differences between a male, female, and the 10,000, 25,000, and 50,000, which are generally the most common that we write. They're pretty flexible. You can get 15, 20,
Sure.
30.
Yep.
It's really whatever's best.
You
for
can
your
base it
family.
on what your family can afford each month, which I love that too. You can actually type in there, if you know you've got $20 a month and you know the child's age, we can come up with that dollar amount.
All right. So after you make a decision, the next natural question is, how do you apply? So let's talk about the application and underwriting process. Application, really you just need to identify which coverage type would best fit your family's need, whether it's just attaching the rider onto a policy that you have or that you purchase, or getting a whole life policy from day 15 or whenever you realize the importance of the children's insurance. So after that, you just determine the amount, answer the few health questions that we went over. There's 5 of them generally. Not many companies have more than 5 for children since the time frame is so small. And then you just have to figure out what's best for your family financially, whether that's setting up an auto withdrawal or direct bill. If you wanted to set up the EFT and just have it come out of your account every month, what you would need to have is the routing number, the bank account number, and whatever date you want it to be drafted. Companies let you pick
Pretty
the draft
simple.
date.
Yep.
So that's everything you need to know about children's insurance. But since we have you here, we also just wanted to discuss really briefly. You're already responsible enough to have watched this entire webinar about the pros and cons of insuring your children. But Grange put out these 4 bullet points that I think it's really important to highlight. So, income replacement. Half of all U.S. workers would struggle financially just 1 month after losing an income of either spouse. So you want to make sure that you have enough coverage on you personally to replace that income so that your family's all right should that tragedy occur. Education costs. If your children could afford to go to college, should something happen to you, that's important. Mm-hmm. Mortgage protection. You don't want to lose your home. Loss of a breadwinner can mean the loss of the family's home. If they had to, would your loved ones be financially prepared to pay off the mortgage? And wealth transfer. You spoke on this just very briefly earlier. It's generally tax-free on the federal level and can pay out more than the premiums paid in. I remember this from the life insurance test, but aleatory. That's a fun word that I learned.
Right.
It means you get out more than what you put in. It's an uneven relationship there between you and the life insurance company. And it could be a really effective tool for wealth transfer, whether it be from a grandparent or parent.
Is that it already?
Yeah, time flies when you're having fun.
We hope you really enjoyed our webinar because for us, this, like we talked about earlier, this is something that's a passion for us. It's not just about making a sale. And I always talk to people about, I am in this because I really want for people to understand. You don't have to be one of those people that we see on a GoFundMe, or one of your family members don't need to be someone we see on a GoFundMe. If you just look, even in the newspaper these days, you know, there's so many cries for help because if I can tell one more quick story, we had a close family friend that lost a loved one very suddenly this last year, and the funeral home is also a business. So a lot of times people don't think about that. We go there in a time of mourning. We go there when we're distraught, but this family who was going through the worst day of their life was told there would be no viewing until there was $8,000 paid up front. So there had to be a GoFundMe page established for this family. And how heartbreaking is it to see people that you know go through something like that, and then during a time of need, the financial strain on top of it. So please know we're so happy that you took the time to just sit through and listen about this. If you have any questions, be assured we'd be more than happy to answer them and take care of any needs that you have.
Yeah, absolutely. We are not a huge call center that whenever you reach out to us, you're not going to get, a different person each time. You can call and specifically request Gwen or I, and we'd be more than happy to talk to you. And if you have any other questions that we didn't answer, that you're wondering, or if something we said wasn't clear, reach out to us. Our emails are pretty simple: ryan.ingram and gwen.price@thomasandgrushon.com. So send us an email, and we will be more than happy to get back with you. And we really look forward to speaking with you soon.
Thank you.